All right, so for part two of the video topic series on financial planning needs and the evolution of those needs, I want to walk through this template that I use to put together what I call a primer plan for prospective clients that come our way to see whether we're a right fit, whether we can address their needs, and whether, frankly, the prospective client is a good fit for us. One of the big problems we face when we start talking is that there is no common official definition of what financial planning is. Most of the media that you hear only talks about the investment accounts and investment performance, and that's really it. And so there's not a lot of focus, education, that sort of stuff as it relates to other topics that impact your finances in major ways and are just as important, if not more important, than the investment accounts in certain contexts. And so what I'm trying to do is outline how I think about financial planning, how I can help you go about sort of organizing and categorizing things, and then just show you where there may or may not be value to you in working with us. So on the left-hand column, what I'm doing is I'm breaking up the vague concept of financial planning into a series of smaller micro plans or sub plans. So what is the plan for savings? What is the plan for your taxes? What is the plan for your debts, for your income, for the resilience of your financial life? The investment plan. What is the plan for your benefits at work? And then I say coaching here, this is really the human aspect of working with an advisor. And so it's these 8 subcategories. And for each one, I'm just identifying 3 high-level topic areas that need to be addressed. And on the right side, what I'm doing is talking about various strategies that we might employ per topic area. Now, the goal of this is to try and put a huge, wide array of topics and strategies and consolidate them down to one page. So this is by no means exhaustive, but I hope it's illustrative for the types of things that we'll talk about and deal with. And just understand that if you have issues that impact your financial life, that they are fair game. When working with a financial planner, we should be the first person you come to with issues that relate to your financial life. And if we determine that we're not the right expert to give the advice, such as drafting legal documents or certain tax advice or filing taxes or selling insurance, because at least with me, I'm a fiduciary, I'm registered as an investment advisor, which means that there are no product sales. I don't sell insurance. I don't accept commissions or kickbacks or revenue sharing or anything like that. But I can still help you get the things that you need in the event that you do need insurance, or you do need an estate plan, or you do need to have your taxes filed, for example. So what I'm illustrating is different strategies, and then I color code them as to whether I think I can help you save money in these areas. And so you're just looking at the template. This is not specific to any one person. But in general, things like determining what your emergency cash reserve should be, well, it's going to be somewhere in the realm of 6 to 12 months worth of expenses in most cases, not all cases. And although I can help you figure that out, I'm not going to tell you that that's going to put money back into your pocket. That's not necessarily, that's not going to justify a fee that you're paying me. Social Security, for the majority of the households I work with, as I mentioned in the previous video, I'm right around 30 households that I'm working with. Social Security is a long way off. So it will be part of the planning that we do and the modeling that we do, but I'm not going to pretend that it's relevant to you at this stage of your life in most cases. For those of you that are associate attorneys and even partners, you'll see down here that the most red in the template itself comes under income. There are planning opportunities for the types of income that come into your household, for the amount of income that comes into your household, and for the frequency with which you're paid. But for BigLaw associates, for example, you're paid just a salary and bonus. You get a W-2 tax form at the end of every year, and it's very inflexible. You're paid twice a month. In some cases, you may be paid every other week. So you're either paid 24 times a year or 26 times a year. And there's no flexibility with that. We can't adjust the income. And so for that reason, there's not really much for us to do for you in terms of the salary and bonus, in terms of the frequency with which you're paid. The amount here varies for everybody, depending on whether you're an associate and which year you are, whether you're a partner. And we do have clients that are actually business owners, that they own their own law firm. Or a lot of our clients have spouses or significant others that are not attorneys. And so these things may change to a yellow or to a green. If you're a business owner and you can be flexible with when you are paid and how much you are paid, then there's a lot we can do with this. But for the most part, for the template at least, I generally color code these red, and then we'll adjust them to green or yellow depending on the client-specific situation. So that leaves the green stuff for the most part. So you're going to have in savings, you're going to have savings that are earmarked for retirement, and you're going to have savings that are earmarked for pre-retirement. That's not the only way to think about it. Those are not the only categories, but that's just a high-level view of a way you can think about it. So usually I can help you with your 401k. Usually I can help you with a Roth IRA. Most of my clients, if not all, make too much money to contribute directly to a Roth IRA, but we can help with a backdoor Roth IRA strategy. Pre-retirement earmarks, these are things like your just traditional taxable investment account, just a regular brokerage account. We can usually help with that. If you have a health savings account at work, and for the purposes of this video, I would make this orange because when I'm talking to you, I don't know whether you have a health savings account at work. If you have a health savings account at work, I can help you with that. And then if you have children, then we can talk about college savings. And typically that's done through a 529 education savings plan. That can be used for college, and up to $10,000 a year can be used for K through 12 education expenses, like with private school and things like that. Tax strategies. So obviously we want to reduce your taxable income. There's really not a lot to say about that. We can do that in some ways. This is where you are often sold a bill of goods through life insurance. So I know that you get cold emails and cold calls at your desk from life insurance agents who call and they say they have these wonderful strategies for attorneys to plan for your investments and for your taxes, and maybe they'll mention insurance, maybe not. And generally what they're doing is they're preying on the fact that you're probably maxing out your 401k. You may not be, but hopefully you are. And basically you're exhausting all the pre-tax savings vehicles that you have available to you sometimes. So a lot of people aren't using their health savings account, and you should be. And so they'll say, well, you can buy this permanent life insurance or this whole life insurance, and it's going to give you all these tax benefits and everything. Don't fall for it. Do not fall for it. I guess I shouldn't give advice that way. I would just say be extremely diligent in your research about the associated fees and the way those policies work. Do not be deluded by the words guarantee or tax savings. These are insurance products that are sold for commissions that are generally, in my opinion, oversold drastically to the high income attorney population. Anyway, we want to reduce your taxable income. We can do that through other ways, particularly around your investment strategies, making those more tax efficient and making sure you're taking advantage of your pre-tax savings opportunities. Asset location. This is one of the most technical things I'll talk about, and I won't dive too deep into it here except for to say that there are generally 3 different styles or types of investment accounts when it comes to taxation. Your brokerage account is just taxable in the current year. So dividends and interest paid from the investments in your account are taxable to you in the year that they're paid. Any capital gains, any profits you make in your investments that are realized are taxable to you. Traditional accounts could also be known as pre-tax, like your pre-tax 401k or a traditional IRA or something like that. You get an upfront tax deduction for the contribution, and then you pay taxes when you remove the dollars from the account later. And then finally, Roth accounts. You don't get any upfront tax deduction, but the assets grow tax-free, and as long as you remove the dollars for a qualified reason or in a qualified way, they're never taxed again. So 3 different types of taxation. And your investment portfolio is going to be diversified, or it should be diversified, and it's going to hold different types of stocks and different types of bonds. And those different types of investments are taxed at different rates using different tax metrics. And so what you can do is, if you've seen a pie chart of what an investment account might look like with stocks and bonds, you can take the different slices of the pie and put them into the different types of accounts to optimize the tax efficiency. That's called asset location, and that will help you with your tax burden. Finally, we want to target tax rates over your lifetime. So you can imagine a situation where you have your working career as an associate, and then you go on to, whether it's partnership or in-house or a completely different career, business ownership, whatever you want to do, you have relatively high tax rates. Then you can imagine a scenario where you retire sometime before age 75 and your income drops, and therefore your tax rates drop significantly. And then at age 75, under current law, you're forced to start taking distributions from your pre-tax accounts like your 401k, and all of a sudden your taxes start ballooning again for the rest of your life. Well, we want to come up with a strategy to smooth the tax rate over your lifetime, because generally speaking, that will result in lower taxes paid over your lifetime. Debt strategies, plan for debt. Most of my clients have student loans. Most of my clients either have a mortgage or they would like to have a mortgage and buy a house. And then there are personal and business loans that can be made available to you depending on your career and income and all that sort of stuff. So with the student loans, help you analyze the loan types, when you got the loans, the types of repayment plans that would be available to you, and then balancing the repayment strategies with your investment strategy. For mortgages, help you analyze the different loan offers you get, the fixed rates, adjustable rates, the loan terms, whether it's 30 years, 15 years, the break-evens, how long you plan to live in the home, all that sort of stuff. And then finally, personal business loans, particularly if you become a partner. There are going to be banks tripping all over themselves to lend you money for various reasons. And often there are wise ways to use these loan programs and credit facilities, and we can help you navigate that. Income, we already talked about. Resilience, you got to protect your financial life. I do not sell insurance. Nonetheless, insurance can be a critical part of your financial plan, and I can help you figure out exactly what you need there to make sure that you get what you need and you don't get what you don't need. So you're going to have life and disability insurance in most cases through work. In most cases, you're going to need to supplement the disability coverage. And depending on your situation with your family, you may need to supplement your life coverage. If you own a home, you're most likely going to need umbrella insurance coverage, which adds liability coverage on top of your homeowner's policy and your auto policy. Estate documents. A lot of people really don't feel like they need estate plan documents, particularly the probate documents, because they are not rich and don't feel like they have an estate to hand down. But really, this is beyond that, and it also includes the medical documents that would tell your family and medical professionals what your wishes are in the event that you're incapacitated, who can make decisions on your behalf, who can control your finances. These are really important things to have on file to protect yourself and your loved ones. Lines of credit. These are a bunch of acronyms, or at least two acronyms. HELOC stands for home equity line of credit. So getting a line of credit against the equity in your home if you own a home. SBL, every bank has a different acronym. I call it securities-based lending. And basically, your taxable brokerage account, the bank will typically extend a line of credit to you backed up by the assets in your taxable investment account. And these become important when we start talking about having 6 to 12 months of expenses as an emergency cash reserve. And for many of the attorney families that I work with, we're talking about 6 figures plus. If you think about how much you spend in a year, whether it's through rent, mortgage, insurance, just living expenses, all that stuff really adds up. And you may be surprised, you may be shocked, but it adds up. And it can be 6 figures plus. You don't typically want to carry 6 figures plus in a bank account, even if the bank account happens to be getting 4 or 5% interest right now. That's not a good long-term strategy for growing wealth. And so what you want to do is, as soon as you can, you want to supplement the emergency cash reserve, keep less in the bank, and have more available via these lines of credit. And finally, the personal line of credit, particularly for partner attorneys. The banks are going to be willing to issue a line of credit against just your personal recognizance and credit worthiness. And this can be used to help with the equity buy-in and a variety of other things. Importantly, you want to get these lines of credit and hopefully never use them in your life. That would be the most ideal situation. And if you do have the lines of credit, you want them to have no fees associated with them while you're not using them. And the only time they cost you anything is if you actually access the line of credit. Then you're going to pay interest on your borrowings. But that interest, because the credit lines are backed up by collateral like your home and your investment accounts, they're going to offer significantly lower interest rates versus like a credit card, for example, where credit cards are really just non-recourse loans where they can't come take your stuff away. They can ding your credit score, but they're not going to come take your house. So anyway, you want to make sure that these are low fee, no fee types of credit lines, and ideally you never use them in your life. They're there for emergency purposes only. Investments, the most popular topic of all, particularly in the media. So I can help you design the portfolio, help you determine what allocation you should have between stocks and bonds, and then there is the maintenance of the portfolio. The portions that are in green are the things that I do for you, whether I manage your investments or I do not manage your investments. I can help you steer your portfolio towards low-cost, tax-efficient investments that align with your goals and style of investing. I can help you determine what your target risk should be between stocks and bonds, and I can help you determine on an annual basis how that should evolve over time. So just generally speaking, you're typically more aggressive in your younger years, earlier working career years, and then over time you become more conservative. What is in yellow are the things that I cannot do for you if I'm not managing the money myself. I can't select the investment funds for you if I'm not managing it. I can't rebalance your portfolio on your behalf if I'm not managing it. I can't do the tax strategies for you if I'm not managing it. So the asset location is what we talked about up here. TLH stands for tax loss harvesting. So you may have heard me say that in a taxable investment account, if you have any gains that are realized, they're taxable to you in that year. If you have losses, you can actually realize those losses, and currently you can count up to $3,000 in losses against your income for the year to get a tax reduction, or you can offset gains elsewhere with the losses, and those are unlimited and they carry over year to year. So in situations where the market is down and you have losses in your taxable investment account, it can be a tax-efficient strategy to recognize those losses and offset gains elsewhere or income, whether now or in the future. These all turn green if I'm managing your money. They are red if I am not managing your money directly. Benefits at work. Most people are not reading the 80-page employee benefits plan in its entirety and getting into the details. So we'll help you figure all that out. Should you have the PPO plan at work, the HMO plan? Should you be in the health savings account versus a flexible spending account, et cetera, et cetera? For insurance, you'll have default coverages, usually for disability as well as for life. You may have voluntary coverages that you can add on top of that. You may have a choice of whether you pay for those coverage on a pre-tax basis or an after-tax basis. All those are things that we can help you navigate and optimize. And then finally, a small handful of people have extra savings opportunities in their 401k plan. An example of this would be a 401k that has a pre-tax option, a Roth option, and then the very unusual, very useful third bucket that is called after tax. And I have a separate video of that up on my YouTube channel. Finally, the human aspect, the coaching plan. So I do a ton of these videos. I often answer client questions via videos like this or the Blackboard explainer video that you saw previously. They do tend to be long, but frankly, I get the answer to you, and we don't have to set a meeting every time unless you want to. And for a lot of the attorneys I work with, it's much more convenient for them to be able to watch one of these videos for 20 minutes at 11:30 p.m. at night outside of when they happen to get a break from work, rather than set a meeting with me in the middle of the day to try and get a question answered. So I do a lot of these videos. Blogs, I haven't written one in a long time, but that's definitely on the agenda for me. And then just the personal communication and coaching. Like, my goal is to have the most educated clients out there. I am completely convinced that the more you understand the rationale behind what we're doing, then the more confident and comfortable you will be. It's a better experience for you. It's a better experience for me. And it's going to help you stay with the plan, stick with the plan when things get rough, particularly in the investment world. Availability. You have ongoing unlimited access as a client. I've never had to put up a gate. I do have some clients where it's a struggle to get them on the phone or in a meeting once a year. I have some clients that want to meet quarterly or are at least willing to meet quarterly. And I have some clients that we're emailing, texting, talking weekly. I've never run into a situation where I have to put up a gate for somebody. And this has an incredible amount of value, in my opinion, compared to some other service offerings out there. Finally, advice versus permission. I want to give you guidance. I want to arm you with the information that you need to make an informed decision for yourself. I don't want to be your mom, and I don't want to be the one where you tell a friend that your financial advisor wouldn't let you go buy the car or wouldn't let you go spend 2 weeks in Asia for vacation, whatever it is you want to do. My role is not to tell you what you're allowed to do or not allowed to do. My role is to tell you what the consequences of the decisions may look like, and what the give and take is going to be, and essentially to take your goals and the things you want to do and then build your financial plan around that. And you're definitely smart enough to make informed decisions on your own. Everybody has a different set of priorities, and I am not here to judge you. Okay, so that's what a primer plan is. When we talk, if you'd like to get into the nitty-gritty with your details on this, then I'd be happy to customize it for you and color code it for your specific situation, and hopefully give you a great idea and sense of how it is we can help you and where the value is. All right, thanks a lot.